One of the hardest things to learn is to look at the camera when we speak versus looking at the
Yes,
screen. It's always tempting to look over there. And that little
we're
red,
live.
little red. All right, I'll call the Crow Wing County Budget Committee meeting to order for Thursday, March 11th, 2021. And I will turn it over to, well, one quick reminder that this is not formal like our board meetings for the commissioners. So if you have a question, just go ahead, be respectful of, if you hear somebody else start in, allow them to ask their question and complete their thought. Other than that, Nick, it's your show.
Good morning, Commissioners. At the last committee meeting, we had some further analysis that was requested. One of those was a further analysis of the Commissioner section. I did send that out to everybody the week after that meeting. Were there any questions related to that one? Anybody recalls?
I didn't have any questions.
No.
Doesn't
Okay.
appear that there were.
Just wanted to make
So
sure.
thank you very much for doing that.
So we'll jump into, I'm going to try this. We'll try something new. We're going to actually share my screen. See if this works the way it's supposed to.
There it is.
Hopefully this stays working the way it's supposed to. We are going to start out with historical actuals. That was a request from the last budget committee meeting. Follow up on that. We'll go through our financial reports discussion, another follow-up to last budget committee. We'll do a review of the 2022 budget calendar, and then a little bit on our financial status through the end of February. Starting with our historical actuals, all of our major funds combined, which is the general fund, highway, community service, and our capital projects funds. This is the trending for our actual revenues. The orange line is our actual expenses year over year. So in 2019, you can see that we had fund balance usage because our expenses exceeded our revenues, and I did break this out to levy revenues, which is the blue, and non-levy revenues, which is the green. You also saw that we used fund balance in 2018. In 2020, we have fund balance growth. So this is just a high-level overview of all of the major funds combined.
Nick,
Yep.
if you can go back to that one, just so in 2020, the fact that we overexceeded our non-levy revenue, is that part of the CARES?
The CARES Act did help us with that, yes.
Okay.
There is also, we overperformed or were under budget in community services as well, which allowed us to build some fund balance there.
Okay.
So between those two, that's what allowed us to get to that point. Just digging directly into the general fund, revenues are green, yellow are expenses. You can see that our trend for expenses is increasing year over year. A big portion of the driver for this is payroll and salaries. Majority of our expenses are payroll and salaries, so that does drive us there. We've also seen reduced revenues and increased expenses in other areas as well. Highway fund. This is the fund that is always a challenge to follow because revenues are dependent on the number of projects we do for state aid side. Expenses are dependent on the number of projects we do per year. You can see in 2016, 2017, 2018, 2019, and not 2020, revenues exceeded our expenses, local option sales tax outperforming and staying within our budgetary confines for the expense side, allowed us to build fund balance, specifically in the local option sales tax portion. In 2020, our expenses did exceed revenues. We did increase our expenses out of the local option sales tax. There's fund balance built in that area for that purpose. We also have timing issues here too, where we'll incur an expense in 2020, but not get the revenues back from the state till 2021. And we'll see that later when we look at the financial status update, that we're starting to see some of those revenues outperform in highway through the first 2 months because we're getting our payments for projects that were completed last year. Community Services Fund, we were slightly under 2019 for expenses. Out-of-home placement and a number of other programs saw reduced expenses in 2020, which was a a good win for us. It allowed us to start putting some money back into fund balance. This is an area that we are struggling with our fund balance now. So this gave us a good foothold into the future to try and get us into a positive position. And when we look at cash flows, we'll kind of see that we're in a better position this year. We're still not out of the woods for cash flow or fund balance and community services, but we went the right direction in 2020. Capital Projects Fund, you'll see in 2019 the revenue drastically decreased. That was planned. We did not levy any revenue for the Capital Projects Fund in 2019. So our revenues did drop off in 2019, and we brought those levy revenues back in 2020, which is why we see that big jump. Expenses in 2017, 2018, 2019 have slowly been increasing. This is planful because things are getting more expensive, and to keep up buildings and everything else that we have in the county that relates to capital, those expenses are kind of expected to increase year over year. In 2020, you see that decline. That is a result of us, or you, electing to freeze the Capital Projects Fund for 2020 and allowing us to rebuild the fund balance in this area and have cash available in case the pandemic caused challenges for us. Thankfully, we made it through 2020 doing fairly well. Specific to the SMT level areas, breaking out the revenues by SMT level gets very difficult, especially when we start taking historical pictures. So we focus primarily in the expense side here. It is the area that majority of the SMT members have the most control over, is the expense side. So this is an area we elected to focus in on. The blue are the budgeted expenses. The orange are actual expenses. You can see that highway has, for 16 and 17, underperformed budget or been to the good. And then in 18, 19, and 20, we did outperform or spend more than we anticipated. This comes down to project timing. It comes down to new projects coming through the hopper. We traditionally do not do budget amendments in highway when a new project comes on board partway through the year. Highway does come and inform you that they have a new project they're going to work on. We just have traditionally not done budget amendments for that. Part of the reason for that is it gives you an opportunity at year end to see how much more did they spend than we planned, and then explain why there's that variance. If we do the budget amendments throughout the year, when you get to year end, it looks really good, but we spent $1 million more than we had originally planned. So traditionally, we haven't done it here. We're looking at our options here of how can we better track those new projects and update the budget, and track where did we start, where did we end with our revised budget, and where were the actuals. It's a work in progress. Community services, traditionally over the last 4 out of 5 years, have overperformed on their budgeted expenses. This year was the first year that we were under our budget, which contributed to that fund balance growth. Any questions on community services?
And we were under primarily on that one because of out-of-home placement, or?
Out-of-home placement and a few other program areas they had, they were under what they anticipated.
Okay. So can Teresa explain a little bit more
I
in
believe
detail
Teresa
on that
can
one?
probably explain more, yeah. If she's available. I know she's on there.
Yep. Yes, so last year we did our expenses were under what we had expected, specifically for out-of-home placement. We did have other areas as well. I'm just pulling those up. I believe it was state-operated services came in under as well. That was a big chunk. I don't have a list of them, but another thing to consider when we're talking about that too is the emergency shelter that we had. There was money too that we received for emergency shelter in 2020, and those state funds could carry over into 2021. So even though we received the money in 2020, which helped our revenues be higher, some of that money will be spent in 2021.
So how much was SOS under on theirs? Do you know, Teresa?
They were 165,000 under.
Okay, and then we had $250,000 on out-of-home placement?
Yep, I can pull up the exact here.
Well, I don't need the exact, Teresa. I mean, no, I know it was over 200,000. So,
Yeah, it was significant.
right.
Let me see. And then the AMHI regional award as well, that's a 2-year grant cycle that they have, and that they did not spend all of the money for that award either. So that would also, our expenses would have been under. So
Okay.
out-of-home placement came in 1.5 million below budget for expenses.
I'm not following that one.
So our primary item that was our biggest item that was under budget in 2020 was out-of-home placement. We have a lot of fluctuations having to do with the different grants, the different cycles. Is it echoing for you guys, or is it just for me?
What was the question?
When I'm talking, is it echoing? I'm getting an echo back, and I don't know if it's just me.
No,
No.
we're not getting an echo back.
Okay.
Your screen is black, though? Do you have your video on, or is it blocked?
Let me see.
Like, there's no profile picture on there, it's just a black screen? Does that help your feedback?
I don't know why. It's saying private preview. Only I can see this. Why would that be? Did that fix it?
Well, we can see you now.
Okay.
Is it still echoey for you, though?
When I talk, it's echoey.
And you don't
Like I'm
have,
hearing myself
you only have the
back.
Teams meeting up, right? You don't have YouTube up or anything?
No, only Teams.
Oh, you sound okay on our end.
Okay. Just me then.
So to expand on that a little bit, in public aid assistance overall, we were 1.4 million under budget. Foster home placement was 1.125 under budget, but then we have areas like emergency shelter, which we did not budget for, which was over by 247,000.
Okay.
We have emergency shelter CRF ESP, which was over by 146,000, an unbudgeted expense. So the fluctuations in the other areas offset portions of that. Our overall under budget on expenses 1.15 for community services.
Okay. Very good.
Nick, didn't we, or Therese, didn't we get money for the sheltering the homeless and things?
We did. Overall in community services, our revenues were over by 134,000 only. Part of the issue that we had is due to the timing of, and I always forget which individual tax it is that Land Services has to apply manually. That wasn't applied in time for the settlement in December, so the settlement didn't happen until January. So their property tax line is 652,000 under budget for 2020, but it's going to be made up for in 2021 due to that timing issue. So they did have outperform revenues overall. It just doesn't look like it on the books.
Okay.
All right, let's see if I can get back to this now. All right, anything further on community services? Okay. Commissioner expenses, we trend fairly close to what we budget. Typically, in 2018, I believe the reason for 2018's outperforming was the additional expenses for per diems in 2018. 2019, we modified that schedule for you where you are paid on a salary, no more per diems. We did over budget and we performed well there. In 2020, the salaries that you have for yourselves were adjusted towards the end of the year. That didn't make it into the system, so it looks bad on here. Overall, you were on budget. It just the system didn't catch that change to your salaries.
How did that happen?
So Munis is a fickle beast in that all of our payroll is done in Excel, every bit of it. And then it has to be imported into the system for it to capture that. So Kathy will do adjustments throughout the year. We have, I'm trying to remember if 2019 we had over 30 different sheets that we had to have for every single change that we make, and those each get imported as we go. So that adjustment late in the year, in order for us to do the year roll, that payroll portion has to be in there before we can do that next payroll. So she pushes that in a little early, and that didn't get caught. So it's something we're trying to figure out. We're actually looking at options for a budgeting system to allow us to do more of that in a controlled environment where we aren't doing it in Excel. They're expensive systems, so we're researching what we have.
So is what you're telling me is it's another problem with the IT and the program that we're using?
It's another issue within Munis. Munis does a lot of things very, very well and a lot of things not so well. Budgeting is one of the areas it really struggles. They are slowly making progress in that, but there's a lot of solutions out there that are way ahead of what they can do that can push directly into Munis. So we're looking at what options are out there, but there's a lot of issues on the budget side. One of the biggest ones for us is that we only get 5 iterations of the budget within the system. So every time we make a change, I have to make the change in one level. I can't move it to the next level, make the change so we can track all those changes. So we track everything manually off the system. So it causes risk there for us.
Commissioner Coring?
Yeah, Steve, I'm just wondering, Nick, is this the same glitch or the same reason why there was a snafu with the second assessment district? Is this the same reason or what?
No, this is unrelated. The second assessment district, that one is a manual sheet that I have to fill out and send over to land services for them to certify and put into their system, which is separate from Munis. And there was communication issues there of not validating. That process has changed. I actually got a call 2 or 3 weeks ago from Land Services validating that the numbers that I had on those 2 sheets for first assessment and second assessment district were in line with what was approved in the final levy. And they are paying much more attention and closer attention to that and communicating with the townships, cities, and us as well as representatives of first and second assessment district that we are submitting appropriate numbers.
Mr. Chair,
Yes.
one of the things that we find with Munis is it has a lot of functionality for some of the areas and the day-to-day operations of our organization. What it doesn't allow us to do is really to delve into the reporting in the right way, to provide the in-depth analysis and dashboards and the reports like we want to operate our business. As we've talked before, based on governmental accounting principles, we have to report for our audit a certain structure. We have to report by that fund level, the general fund, the highway fund, community services fund. What we like to report internally is by our service delivery levels or those department level situations, which is what Munis does not allow us to do in many cases accurately and effectively. This is why Nick and the business manager teams, they're looking at some different tools and resources that we would be able to tie together with Munis to be able to create some dashboards and provide better reporting for you as the decision makers within our organization. So that is a major priority that we have for the 2021 year, is to find the right tools that give us the ability to really report the right way and ensure all of our information is accurate and not have to do a bunch of double entry on things.
Thank you.
All right.
It is interesting out there in the business world that in the software that we don't have one piece of software that really addresses all the accounting needs in the industry. We buy a piece of software and then we buy another piece to attach to it, and make it talk to it, to make it operate the way that particular business unit wants it to work. And I saw that at the state level too. There isn't one perfect piece of software out there.
No. And even within Tyler, a lot of the things that are in Munis are modules that we have to buy separately that tie in. They are very big into going out and buying competitors that have something they don't have and then spending the next 5 years trying to integrate it and sell you on, okay, here's the next feature you can add, here's the next feature you can add. They are a massive company and they have a lot of things, but I think that sometimes gets them in trouble where they're spread very thin across a lot of things. So it makes it interesting for us. Veteran services, traditionally they have been under their budgeted expenses. In 19 and 20, they did exceed the budgeted expenses. In 2020, it is an approved expense that you approved for additional staffing in that area that we are working through on having a budget amendment attached to any personnel actions so that we can capture those more effectively going forward. So that's where this variance comes from for veteran services. Administrator expenses trend right on with what we budget. I think he games the system. No, the expenses are fairly limited within the administrator's budget. There's $350,000 worth of expenses here. It's much easier to control when the majority of your expenses are payroll. We can anticipate what the changes will be and adjust this budget accordingly. So they trend right on.
Normally for commissioners, we'd see that same.
Normally for the commissioner side, you'd see the same thing. It's salaries that drive the majority of your budget, so that's what you should be seeing. 2020 is an exception to that.
Okay.
Attorney's office, we did exceed budgeted expenses in 2020. This is very dependent on caseloads and other pieces within that. You can see back in 2018, we also exceeded the budgeted expenses as well. It trends right around that top end for what they budget.
I've got a question.
Yep.
So why, I guess you got to, like the MICA dues and different dues that AMC, so I guess I can't think of any other place to put them. So I guess we decide to put them under the commissioner's budget then?
Let me double check that that's where they're at here.
Well, that is where they're at. But I would assume, I guess I can't think of where else they could be put, but it's, it is for the good of the whole county. I guess it doesn't matter where they go, I guess, but.
Yeah, and I believe that was the theory behind it, is it's for the entire county, and there aren't a lot of really good places to put it unless we put it to undesignated, but then it's harder to monitor that going forward. So
I just hope that people realize when they look at the commissioner's budget and they go, oh my Lord, it's kookamungus. Well, you're adding in these other things that bring it up, these memberships that, I think, $10,000, $12,000 for a membership. I'm thinking it is somewhere in that neighborhood. So anyway, I guess I don't know where else you'd put it, but I don't like it in there, to tell you the truth. But
for 2020, there's an additional about $72,000 worth of expenses in the commissioner's area. That is a good portion of that. $62,000 is membership dues and subscriptions. And then there's property and casualty, travel expenses, and a few other items in there, including telephone. We also have computer and equipment software underneath that as well. So there is an additional $72,000 worth of expenses that hit the commissioners as well.
When you say that computer, how much is the computer amount for the commissioners? Because I don't have a county computer or phone. It's my personal phone and my personal iPad.
The telephone expense is any internal phones and any cell phone stipends.
Okay.
The computer equipment and software was a $1,525. So it looks like probably one laptop was purchased or one PC was purchased.
And that could be the PC at our desk up in the county boardroom. Deb is shaking her head, yes.
Yes. Yep.
Okay. That's all I got on that.
Okay. Takes a lot of clicks to get back to this. Administrative services expenses, this includes finance, HR, facilities, and IT, all within this area. We trend right on with what we have budgeted overall. Not much to really report there. Land services, again, same concept or same thing with administrative services, trending right on budget year over year. So what they put in for expected expenses is where they are living. Sheriff's Office traditionally trends fairly close to budget as well. We did see that they overperformed or were under budget in 2020 this year. A lot of that revolved around personnel. With the pandemic, they delayed some of their hiring processes and withheld refilling some positions for a little while, and that really benefited them. We also saw some reduced expenses in the jail, but we did also see reduced revenues in the jail, so those were kind of offset with each other, but focusing on the expense side, between the jail and personnel is where they saw this savings to be under budget. Capital project side, this is an area that we keep trying to make an effort to be more accurate in. Traditionally, the projects that were submitted, many times the staff could not actually deliver those projects. So we did ask the 3 members of the budget or the capital projects committee, which consists of the fleet manager, the IT manager, and the facilities manager, to start working on trying to bring that more in line. In 2019, we performed fairly well. That is a direct result of that effort. 2020, we didn't perform as well. We performed well because we didn't spend the money, but we weren't towards our budget. This is that freeze. The freeze on those projects is what caused that variance for 2020. Any questions on any bit of that? All right, next on our list is a discussion, and this is truly intended to be a discussion on the financial reports that you would like to see. At the last budget committee meeting, there was conversation of trying to improve our reporting to be more focused in certain areas. We did put together a list of different options that are out there of things that we know we can produce, but we're looking for your input to get a better understanding of what information would you like to see from finance, how often would you like to see it. I mean, I can start going down this a little bit if we'd like, or.
Why don't you go ahead?
Okay.
Maybe that'll spur some conversation.
Okay. With budget versus actuals, the things that we have been doing month over month when we look at the financial status update, that is traditionally following our budget versus actuals. We are doing that on a monthly basis right now. It was brought to that frequency because of our cash flow challenges. We're starting to see progress out of that. We withheld some of our investments from being reinvested to make sure we have cash flow going forward. So that one, if you'd like it to continue monthly, we can keep it at monthly. Otherwise, we can look at quarterly or annual reporting there. And we do the annual and the monthly. The annuals are year-end closeout. The monthly is what we're doing at the end of this meeting and most of our other meetings.
I personally like the monthly on that one.
Perfect.
I would agree with you.
Actuals trending is what we just went through. Traditionally, that is done on an annual basis, just so you can actually see that trend line. There's so many fluctuations from month to month in each departmental area. To do a monthly review of actuals gets really difficult because of February in highway, for instance, with a lot of snow in 2018 and none in 19, you're going to see this huge variance that means nothing to us. So we traditionally do that on an annual basis, and we're working towards improving that aspect.
So Nick, doing that quarterly would probably be more confusing than annually because of those spikes?
It can be. There is some trending that you can see in some of the areas that it's consistent, that it's these 3 months. But we're kind of catching that in the budget versus actual on the monthly basis. You're kind of catching some of that. We just don't have it graphed out to see that.
Yeah, I could see where it would be a little bit misleading, given the way some of the billing and revenues flow.
Yeah, and we have so many areas that have timing that, even community services has timing on reimbursements, that a quarterly view can skew that a little bit. If the state's behind a month, now all of a sudden we look really bad, but it had nothing to do with us, the state was behind. And we did experience quite a bit of that in 2020 where the state was behind on something. We have an expense that we still haven't paid to the state yet because the state's report was wrong and the state hasn't been able to figure out how to correct it, so we haven't made the payment. So our expenses are going to look a little off and we're, I think, 2 quarters in from that billing and still haven't made the payment because the state can't figure out what the payment should be. So that view, getting too granular, can be difficult. Fund balances, we only know our actual fund balance one time a year. It's the year-end picture. So that one is an annual piece that we look at. That is something that we traditionally bring before you as well. Available cash flows, we combine this with our budget versus actuals. We have been doing this on a monthly basis, updating you where our cash flows are at, kind of where our trending has been, and trying to watch that more closely. As our fund balances improve, we shouldn't necessarily have to watch it as closely, but it is a nice gauge of how much do we have sitting available to us month over month. So it's probably something that we can maintain at the monthly level, in my opinion. But it's, again, up to you.
That on a monthly level, I'd like to see that one.
Yeah.
Budgetary trending. With budgetary trending, this is taking the budgeted revenues and expenses that a department has had year over year and graphing it out for you. Without actual expenses or actual revenues, just looking at how have they been budgeting year over year and watching that trend line. That combined with that trend line for the actuals, putting those side by side gives you a view of, okay, their trend has been down, but we continue to see their budget climb. So it's more of a tool to help us with the actual budgeting process than a reporting function, but it is something that would be available to all of you as well. And we're working on how we can improve the amount of information that you get during the budget process. As we get to the budget calendar, we'll talk that we're going to try and bring the budget before you a few more times this year. I think one more time than last year, which last year was one more time than the year prior. So we're trying to get more opportunities for you to get visuals on where the budget's at and what's occurring there. This is a tool that can help with that. Staffing trends. The challenge with staffing trends, we can look at FTE, but FTE doesn't pay attention to whether they're temporary staff, they're part-time staff, or they're full-time staff. It's just a count of here's how many full-time equivalents we have based on the hours people worked. So that one gets really difficult, especially when we go and we add AIS inspectors. And the prior years, we had that as just a flat expense to an outside agency. Now it becomes an FTE equivalent. So it artificially inflates that, and we actually see that a little bit in our payroll expenses year over year as well. Our trend has been 3% increase in salaries and wages. In the last couple of years, we've seen much bigger increases in that amount because we've been taking on these part-time staff under the payroll side rather than the expense side. So this one gets a little difficult, but it is something that we can report on that can give you an idea, and we can communicate a little bit about what is driving those. Is that something you would be interested in, even if it is in personnel committee or within budget?
Any opinions?
Well, you know, staffing becomes one of our major expenses, and I think, you know, if you can clarify why some of those, you know, the numbers are what they are, would helpful. So I think we need to keep an eye on that.
Okay.
Okay. Revenues by type. This is traditionally something that is produced for outside consumption. It's something we can look at as well here, but it's usually meant for the TNT, for the budget book, to show this is where our revenues are actually coming from. Their state revenues, their federal revenues, their local option sales tax, their levy. It is something you see during the truth and taxation and the final budget presentation, but it is something that we can try to watch on a monthly basis of how is that pie trending month over month compared to what we expected. It's probably not a good monthly one. It's probably a much better quarterly review, but that is another option of something we can look at.
I'm comfortable with the way it's being reported now.
Okay. Total county spending, we kind of cover this with our budget versus actuals, but we stay very granular. This is a very high-level look at just what are our revenues and where our expenses countywide. Traditionally, we focus on the four major funds, which is our general fund, our community services fund, the highway fund, and the capital projects fund. We focus on those because those are levy funded. We also have a number of other funds for landfills, solid waste, public land management that are out there, but we traditionally don't pay as much attention because they aren't levy-based. They trend well, they do good. We just don't typically bring them up because it doesn't have an impact on that property tax rate. This would try to combine some of that together to give you that full picture. The one time that you do see those broken out is at that year-end budget meeting, where we actually split out the fund balances for each area and we give you that insight there. So it is something that we could bring to you a little more frequently, maybe on a quarterly basis if you're interested, just to give you a gauge of where everything is at.
I'm comfortable the way we're doing it myself, so.
Okay. And we continue to monitor those month over month. So if we ever see anything that's a major variance that we feel you should be aware of, we'll bring that to you. Local option sales tax performance. This is one area that we continue to outperform. We continue to do well. It's an area that we watch. I think if we ever saw the trend line go the opposite direction, you'd be one of the first ones to know, because it's something that Tim Bray is watching very closely month over month. I get emails from him frequently of, hey, look, it outperformed again. Yeah, it's impressive. So it is something that we can bring to you, just giving you kind of a report out on where is it currently at. If you'd like to see it here, or we can have Tim or Highway work to give you something to update you more frequently on that too. And then property tax collection rates. We can try and track this throughout the year. It gets challenging because somebody may miss that first half payment and pay the full amount in the second half, so that percentage of collections isn't a very accurate number until year end. The challenge comes with a 2020 where we have a timing issue with getting stuff entered into the system. We're sitting about 2 percentage points lower. Normally we're at 97% collection rate. We were at about 95 for 2020, but that's that timing issue rolling over into 2021. So it's an okay gauge, but there are a lot of variables that go into that can influence it and be something that doesn't really give you much insight into the future, but it is a number that's kind of nice to know of where we are at. And that is reported in our comprehensive annual financial report every single year. So it's an annual number, and we can make sure they include it as a discussion topic at our final closeout for the year, but it's traditionally in our annual report.
So is there any appetite to hear that number semi-annually? So we, after the first collection, we'd have a number, and I don't know if there was a variance, because we do have a trend there that I'm sure has been established over the years, but what would be material? What would be the variance number that would cause us to be concerned? And I don't know what that is, Nick. But I think that could be a measure of what we're going to experience and could impact what we look at for the budget for the following year if we're having some severe problems in that area. I don't know if there's an appetite for that.
Mr.
number.
Chair?
Yes, go ahead.
One of the things that, we might want to think about with the property tax collection rates is we might not be able to quantify right now what we would use it for or what that limit might be that we'd be looking at, but perhaps it's something we could provide the report and then the value of the report is triggered from when we provide it, if that makes any sense. I know I'm kind of circle speaking there a little bit, but we might be able to figure out what we would utilize as a metric for that report by looking at it a couple of times. If we looked at collection rates from first half and second half over and over again, we might be able to see a trend line that would develop. Now, there's a lot of things that go into play, a lot of variables that we would see in that particular instance, but at least it's something that we can bring to the forefront and start to put it into our thought process. And then it would potentially become something that you could use in future planning as well.
Thank you. So I'll say yes to that. But I think that's worthy of considering and looking at, at least from my perspective.
And we'll look at how we can pull those reports after collections occur to see if we can find a trend line that can help you make decisions and understand where things are at.
Okay.
So those are examples of the types of things that we could pull together. I did go out and research what other counties are putting out. This is a conglomeration of all kinds of different pieces. Some only put one or two of these together, some put more of them. So it's up to you on what information you would really like to see that help you make those decisions. But these are the key examples that I thought most relevant to us.
And I appreciate that, Nick. I think that you covered our options pretty well.
Okay.
Is there anything that we didn't catch that other commissioners would like to see? I'm not hearing any comments, so.
All right, we'll work to put this all into the rotation and bring it before you. 2022 budget calendar is next on our list. Traditionally, we just bring this before the board to give you an insight into what our intentions are for the budget calendar. This primarily affects the staff on when they need to get their budgets entered and into our systems, and when things are expected to be put together to bring before you for review and presentation. We do intend, and I have some meetings scheduled, but not fully in depth yet, to start working to update the senior managers on what their expectations are, where they think they're going, and how this budget calendar is going to look this year, this week and next week. The capital projects plan, our initial packet to the CIP members, is intended to go out April 12th, with them being able to get together and start planning the following week. The intent there is to give them 5 weeks to get everything put together and into the system. This is something they are consistently working on year over year, so 5 weeks to actually put it in there looks like a short period of time, but they do have long-term plans for their CIP, so it just gives them opportunity to have follow-up meetings and work together as a group to make sure that we're within our expected range for expenses. That lasts for 5 weeks. We'll also, in early May, go out to the departments, or digitally go out to the departments to review the payroll portions of their areas, where they have been trending, what they actually have out there, and what their expectations are for new staffing going forward. so we have a better insight into what to start communicating back to you. From there, the 21st of May is when CIP is supposed to be entered and into the system. We follow that up with an advisory committee meeting for the CIP team to review that, make sure that we're where we need to be, and to negotiate if we need to get lower than what was initially entered into the system. Personnel budgets typically get entered in late May. That is still our intent, is to get personnel in late May, which will actually kick off the operating budget portion. Last year, we gave the department 6 weeks to get this into the system. This year, we bumped it down to 5 in order for me to keep the timeline concise and be able to bring it back to you. I dropped 1 week off this. I believe we'll be able to open the system up earlier than that, so they'll have more time for the business managers to get in and enter things. But this is our designated time frame for when those are going to be available for them to enter into the system. The advisory committee will meet again in June, again to just review to make sure everything is up to par. The negotiating from the first round got entered in the system, and everything is in place. And then we will, as a CIP team, present to SMT in June, or at the end of June there. Our intent is for the first opportunity for you to see everything, or no, sorry, June 25th is the end of the operating budget preparation and entry deadline, with the first review being July 8th, with us bringing the CIP budget and an update of where the operating budget came into. This will be prior to senior managers' opportunity to go through as a whole, but we want to give you an update of where they came in at to start with, so that we can get a little direction from you on, how do we need to work with S&T to get to the numbers that we need to be at. July 9th through the August 5th time period is when departments and SMT will have the opportunity to go back through, review the input that we got from, or get from you, and adjust budgets accordingly in an effort to complete that preliminary budget. August 12th, we will again bring the operating and CIP budget presentation, or budget before you. This will be hopefully a much more crisp budget than the first round you see it, so it's getting closer to where we need to be for year end. August and September are when we work on finalizing our preliminary. Traditionally, this is negotiations in SMT and discussions in SMT to get us down to the number that you will that you authorize us to go to. The final review with the budget committee will be September 9th, with preliminary tax levy approval on the 21st of September. We have until the 30th of September to certify, but we try to keep this in line with your normal board meeting schedule. Oops. October will come again with the operating CIP budget to go through again where we are at, where we are set for the final numbers, and any work that needs to be done once preliminary is set to get the final down to where you would like it to be. October and November is opportunity for the departments to finalize the operating budget. Capital and operating budget again, or public hearing, occurs December 14th. This is a required meeting. There has been talk about potential changes to how this is handled in the legislature or state legislature. I don't anticipate that it's going to change, but that's up to them to determine if that's going to be modified. For now, December 14th is our intended day to come for final certification for the levy and budget. And that is our budget calendar for 2022 or 2021, depending how you want to look at it. Any questions on that?
Questions?
All right, next on our list is financial status update. And let's see if I can jump. for now, we're just gonna go like this. Financial status update. Last night, I sent out an email with the month-end information for February. Our close for the month occurs on the 10th of the following month. So we just closed the books yesterday morning. So this is a very quick, high-level, dirty analysis because we had one day to get through everything, get it typed up and sent out to you. That's why you got it late last night. And it's going to present some challenges going forward in Budget Committee with some of our dates being on like the 8th. We may not be able to get you a full in-depth analysis because the books may not be closed out, but we'll do our best to get you as much information as we can. But there are entries that happen at month end that can have some variations in what that actually, the month looks like for each department. So we'll do our best to give you as much information as we can, as timely as we can. But keep in mind that some months when we aren't meeting after the 10th, that these may not be exactly perfect to how the month closed. Starting with general fund, we were outperforming on revenues. This is primarily due to the property tax timing thing. With that settlement happening in January, we're outperforming what we expected to have in January. That's the primary driver behind the general fund's revenue increase above budget. We are under budget in expenses. That is primarily driven by personnel, the personnel side of that being the sheriff's office. They are still in that holding pattern of how they're replacing their staff, finding qualified staff to replace the open positions. So that's helping us see some savings in our personnel side, primarily there. Highway fund, we're outperforming in revenues. State aid, we did see the settlement from last year's state aid, which is for our maintenance side primarily. That is paid to us 3 times a year. We get a settlement early in the year, mid-year, and end of year. We also overshot what we expected the impact of COVID to be on the state aid allotment that we receive. The initial information we were getting from the state was that the impact was going to be pretty significant. So our budget process is very early into the summer and fall. We were going off the information we have. We don't get notification from state aid of what the actual allotment is going to be until January of the given year. So we didn't know what we were getting from state aid until January of this year. They did not see as much of an impact as they anticipated. So our revenues are going to outperform in highway for state aid because we were going with the information we had at the time. You'll see that throughout the year. Lost also contributes to this. We continue to see that outperform. The economy keeps cruising along up here. And budget expenses, we're right on with where we anticipate to be. Community Services Fund is overperforming on revenues. Again, the property tax timing contributes to this. We also see that the grants are overperforming with majority of the grants besides state grants overperforming. State grants is actually underperforming. And we can get a little more detail as we cruise along here. They're also under budget in expense area, primarily due to that public aid assistance and the services and charges in their area being under budget. Capital Projects Fund, we are overperforming in revenues. Again, that property tax timing is driving the majority of that. And in this area, it's driving all of it. We are well under budget for the expense side, but capital projects, we don't do monthly budgeting for, so it takes the expense, spreads it over all 12 months. So it's not much of an accurate picture of how we're performing because we may have a project that's going to take 3 months in the middle of summer, but that could take 6 months, it could take 1 month. We never really know and when a contractor can start, so it just gets spread over 12. So that area is kind of a hard one for us to trend and track. We can get more in depth into the divisional breakdown. I'm just going to continue following along on the sheet I sent you. So if you want more information on any area, ask. I do have everything pulled up so we can dig further if we need to. Governance services, we are over budget. The hard part with governance services is the area, or this area only has $33,000 worth of revenue budget. So any variance is going to make that percent look really out of line. Gotta look here quick. Clear this piece here. Takes me a little bit to get this thing to clear up. All right. We had $33,820 budgeted. We've received $59,000 in this area. Charges and services are the primary driver to this, and that's within the attorney's office where we see that increase. So it's a $25,000 variance. It makes it look like a 200% increase, but it's $25,000 out of a $96 million budget. For the expense side, we are trending pretty close to right on with what we anticipate. We did see there was an agreement with the contracted attorneys to provide additional revenue or additional monies to them to deal with the COVID aspects of their job related to our projects that we run through them. So that's why you see the 101.3%. This area has $943,000 budgeted. We spent $956,000, so it's a $12,000 variance. We did see we are performing to the good in personnel services. We're at 95% there. Services and charges, we're at 80.51%. Supplies and materials, we're at 269%. This is related to that state of emergency funding for the attorneys, contracted attorneys. It just happens to go into supplies and materials because that's where that object code is sitting. Administrative services, revenues are at 95.47%. License and permit revenue is spread over 12 months. It's not over 12 months. This is an area that I have flagged that we need to look at. Can we budget this monthly so that we get an accurate picture? So through February, the reason we're at 95.47 is our licenses and permits are under what we have budgeted, but we traditionally don't collect any revenue in this area through February year over year. So look for this to look better next year. Expense size, we're at 94.87%, primarily caused by the supplies and materials being under budget by $60,250. I'll jump there quick. We see fuel expenses for the buildings as well as building maintenance supplies being well under what we budgeted for the year. Good example of fuel for buildings is at 62.48% through February. A lot of this comes down to we don't have staff in the buildings, so facilities is controlling the temperatures in areas to help us reduce our expenses. So we do see improvement in that number month over month and over what we budgeted because we can limit how much of the space we're actually heating, what we can do with the buildings. Jumping to land services, revenue is at 125.62% of budget. Permits are outperforming, and they have been outperforming for the last a little over a year, I believe. Let me jump to them too here. Primary area here is the recorder's fees. There is a $19,330 to the good variance within the recorder's fee. That's driving a good portion of this, almost all of it. It's just the nature of how many people are coming in to get their documents recorded, and that dictates what our fees are going to be. We continue to see a lot of usage of refinancing and other things that drive those recorder's fees. So that's why our budget is outperforming there. Charges for services are also outperforming. Actually, I got that already. Combined, there we go. Expenses, they are right on budget with everything. Personnel services it's slightly under budget. Service and charges are slightly over budget. And that is in our postage and postal box rentals. which, to get clarification on that, I'd need Jessica to jump in if she knows why postage and postal box rental is up significantly.
Yep, I'm here. Can you hear me?
Yes.
Perfect. That's up just for our tax statement mailing. Usually we get that bill in March, so when I monthly budgeted, I put it in March. And it just came to us a little early this year. We're ahead of it a little more than normal. So we got that bill in February, and that's about $20,000. So it'll even out in first quarter, at the end of first quarter.
Yeah, the variance in that line is $24,000. We budgeted $1,636, we spent $25,663. So if it's just the timing on the expense there, it should, as Jessica said, equal out. All right, jumping to sheriff's offices. Revenues are at 99.76% of budget. Let's see if we can find. On the federal grant side, we saw that they were under what they budgeted by about $20,000, but our license and permits are over by $18,000. So we have more revenue coming in for the gun permits. I think all of us know that gun sales are through the roof, so gun permits being up kind of makes sense. On the federal grant side, we saw in the Homeland Security grant program, we budgeted for $28,000. We only got $11,000 so far through February. So we're at 38.15% there, and that's driving the majority of the variance there. We also see that Board of Prisoners was budgeted at $15,000. We collected $2,955 for a variance of $12,872. So it's another area we need to be watching. Still, those revenues from the state, what those are panning out to be. We also saw some reduced revenues in our miscellaneous area here, which if it will expand for me.
Nick, are we still housing state inmates?
I believe so. I don't know exactly how
Where
many.
exactly does that all stand as far as the contract?
I think Dan.
Dan, do you have any insight on that one?
Yeah, I just checked into that this morning. We are still housing a couple. In January, we housed 2, and February, we had 1. So not a whole lot, but there's still a couple out there that are stragglers. So
Are those numbers we should expect, or will that eventually drop to 0?
that I don't know. I can check into. I am assuming that it may drop to 0. I think these are stragglers that we're still holding on since they're in our jail. They don't want to transport from jail to jail, still with the COVID situation. So,
Okay.
but I'll get a final. I'll check with Heath on that, but I'm assuming they'll probably go to 0. They're still being maybe more that come in here and there as well too, but I don't think it's going to be a whole lot more than 1s and 2s. So
For the most part, that program's kind of scratched this year?
And we did kind of anticipate that. When we went through the budget process, we expected those revenues to more or less zero out. So
And that's COVID related, is that correct, or?
I think there's more than just COVID related to it. The state did want to minimize how much they were transporting prisoners around and trying to keep them combined together. And then I believe there was some effort made to reduce populations so that they didn't have such close interaction with one another. But I believe there's more to it than just COVID. I think, if I remember correctly, the state's making some program changes to the jail system itself to reduce their expenses there. So sending them out and having them housed here is an increased expense. They're trying to control some of that.
So we shouldn't expect any different numbers in 2022?
I don't really anticipate any.
Is it too early to tell? Okay.
All right, on the expense side for Sheriff's Office, we have reduced jail expenses. We have less inmates, we have less state prisoners. We're going to see reduced expenses. We also see that reduction in personnel services. That's, again, the timing of replacing staff and dragging some of that out so that we are properly staffed for what we have today, but making sure that we're ready when things go back to normal. Services and charges and supplies and materials were both under budget. Those are directly related to the jail. We also did see less gasoline purchased through January and February than what we have budgeted. I believe part of that has to do with less patrolling going on and less response to events that may not necessarily need law enforcement. So we see some of that fuel expense reduction there. Any questions on Sheriff's Office?
So you said we're doing fewer patrolling, less patrolling?
Dan, are they doing less patrols and responding to less pieces?
I do believe it's more or less, they're trying to do more verbal over the phone versus in-person meetings, so that would definitely drive the fuel costs down at that point. So I think that's the main driver behind that.
Okay, we still have officers out on the highways though and around the county.
Yes, correct. Yep. They're still doing their shifts, and actually there's we still are trying to minimize any in-office deputies as well too. We're trying to have them on the road more than even being in the office. So.
Okay, thank you.
But it's, yep.
Moving on to highway, revenues here are at 152.02%. As we discussed earlier, the state aid revenues were not impacted as much as we anticipated, as well as the collection of last year's state aid allotment. Puts us at 152%. We also see that local option sales tax outperform. Expense side, they are right on budget. Currently, services and charges are over budget. It's contract payments from projects that were completed last year. If they close out that project in December, we don't actually make those, get those revenues until January, February the following year. So that is just a timing piece that artificially inflates the revenue side. Expenses, services and charges were over budget. Again, this is due to timing on contract payments. It just comes down to when everything gets closed out, the project is finished, and when we can make those payments flow year to year.
Nick, back on the revenues, what was the, as far as the state aid, I know that we had discussed a fairly significant decrease in funding. How much, what was the difference there that, because I think there was one project maybe impacted or potentially by that?
The actual allotment towards the construction side, we don't see those revenues until we complete the projects. So that wouldn't necessarily have an impact on how this is performing. State aid allots the money, it sits in a pool. Rob has to go out and actually pull that funding in as we do the projects. So it may have impacts on the future years of when he can deliver projects because he monitors what that fund sits at every single year and modifies the projects to fit within those bounds. The state aid money that we're seeing here is for our maintenance side, is where we're seeing this.
So it's a different pot of money that.
Yep, this is specific to, it goes to the shop and to the plowing efforts and the road maintenance efforts.
Okay, thank you.
Just to put into perspective a little bit, between those two departments, they had budgeted 1.292 million, we collected 1.942. So it's 649,000 more than what we had budgeted. I can't remember the percentages off the top of my head exactly what Tim was getting information on. It kept changing throughout the end of the last year, and what the percent actually ended up being, I can't remember off the top of my head.
That money has dedicated uses.
Yes, it is specific to maintenance efforts. So it can help us pay for the operation of the equipment, which is why shop gets a portion, and then it can pay for pothole patching, crack sealing, other maintenance activities. On the expense side, we also see that they are under budget in salt and fuel costs. It's all relative to the amount of snow and the amount of times they have to go out and actually salt determines how much we spend in both those areas. Reduce the amount of times we have to go out, we see reduced expenses. Any questions on highway? Okay, jumping to community services. For community services, our revenues are at 103.33% through February. State-related payments are under budget, but they're actually scheduled to be coming in March, so it's a timing issue for that portion. Out-of-home placement, Rule 5 reimbursement is up. CW, TCM, I can't remember what portion that is here. Targeted case management, thank you. Was overperforming as well, and then our miscellaneous revenues are overperforming. These are the high-level pieces of their revenue. Teresa, if you would like it, has a very in-depth dig into all the different pieces that go into it, but this is the high level of what is impacting them through February. So if you'd like that information, let us know, and I can work with Teresa to get it to you. On the expense side, we're at 91.57%. Again, sticking to the kind of the high level pieces. Out-of-home placement is under budget by $229,000 through February. That's our primary driver there. We also see that services and charges are under budget, but they do anticipate this will balance out in March as our Northwoods invoice payment, which was budgeted for February, gets paid in March. So that will balance out a little bit, but out-of-home placement continues to perform very well against budget, so we're seeing that reduced expense. Hopefully it continues that way. And that takes us through the department-specific sides. Any questions on anything?
Questions?
So cash flows, we've traditionally referred to them as available cash flows. We're going to try and migrate to unrestricted. They're not restricted or committed to anything. These are funds that we have available to make payments on whatever aspects we need to make payments on. They aren't targeted to a particular area. So in our unrestricted, we do actually see that our trend is up. At the end of February, for total unrestricted cash, we had $13.4 million. Last year at this time, we had $7.51 million. So between that fund balance build and us pulling those CDs and not reinvesting them, that puts us in a better position to hopefully get through our low points without seeing a negative of an unrestricted cash position. Last year, we had negative unrestricted cash positions for a few months, and this should put us back to a good position there. The year prior, in 2019, we had 11.5 million, and we saw 1 month where we saw that negative unrestricted.
I'm sorry, I didn't get that. On 2019, we had what?
At the end of February, we had 11.5 million.
11, and we're at 13 now?
We're at 13 now. So we should be in a position where we don't see that negative cash flow. As we progress through this, if we can continue to see some fund balance growth, we're going to go back and look at what our options are for investing again and start putting some of this money back into CDs and tying them back up. Interest rates are horrible right now. I think our last one was invested at like a 0.2% interest rate. So whether it's better to sit in the money market account and earn 0.01 or to be in a CD and tie it up and earn 0.2, it's up for debate, but we try to get as much return as we can, as quickly as we can. All of our CDs that are reinvested right now are very short-term investments. We're hoping that the bond markets come back, and we've been seeing them kind of start to increase slowly over the last few months. So hopefully those interest rates start to climb back up and we can reinvest those at a much better rate and see our revenue from that side increase.
I think that's a good strategy, though, because they aren't paying anything for them right now, so.
No, and we put one back in for a 6-month and we put one in for a full year. So it's hard to know what length to put in. If you do 6 months, the problem is you're going to get the lowest interest rate they have available. The longer we leave it invested, the better interest rate we're going to get. The difference between the 6 month, granted that was invested 3 months prior to the 12 month, was about 0.5%. But when we looked at investing this last round at a 6 month, a 12 month, and a 2 year, our interest rates were like 0.05% different between the two. And to make sure that we have a proper cash position going through the beginning of this year, we wanted to make sure we had that cash in a short-term or short enough investment that we could actually have access to it if we need it.
Yeah, absolutely.
So cash flows overall are starting to look much better. But it's an impact of us not investing. It's an impact of us seeing that fund balance build for last year. So there are some trade-offs. We'll see a little bit reduced revenues from that. Any questions on unrestricted cash flows?
Nope.
All right. That takes me through everything that I have for today. Are there any additional items?
Anything else? Commissioner Coring, other commissioners, anything else?
Nothing from me, Steve. I was good report.
I think we got a lot of detail that I think most of us wanted to hear and see. And as we move along, if there's adjustments to that, we'll certainly bring that forward. So with that, anybody out there that wants to stir the pot a little bit and cause us to ask more questions? Well, they got quiet all of a sudden. All right, with that, I would say that our budget meeting is over. Thank you, Nick. Thank you, staff out there, for your input. Appreciate it. Be safe out there. It's slippery, people. Be slushy for a few days, except for you, Paul.
Yes, exactly.
All right. Thank you, everybody.